Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into corporate filings to uncover the hidden stories, but sometimes that story is about how much money they just raised and maybe forgot to tell you until now. Get ready because today we are looking at TeraWulf Incorporated. They just dropped a report that details a massive infusion of cash and what it means for their future. Before we dive in like a digital gold rush, hit that subscribe button if you love breaking down these corporate secrets. And hey, we have a growing community on Discord all about this stuff. Link is in the description below. Alright, so TeraWulf Incorporated, you might know them as a player in the energy and infrastructure space, specifically focused on things like Bitcoin mining operations. Today we're looking at a report that basically says they just went out and raised a significant amount of money through convertible notes. Think of it like getting a loan that can turn into ownership later. Now the big news here is the size of this offering. They sold about $1.025 billion worth of these convertible notes. That is a huge amount of money. And get this, they even used an option to buy even more notes, adding another $125 million to the pot. So, in total, they brought in well over $1 billion. That is not pocket change, folks. This offering closed on the 31st of October 2025. The company says they sold these notes to qualified institutional buyers, which means these are big players, not your everyday investor buying in. They did this under something called Rule 144A. Which is a way to sell securities to these sophisticated investors without the hassle of registering everything with the SEC, which can be a long and costly process. Let's talk about the notes themselves. They won't pay regular interest, hence the 0.00% in the name. Instead, if the company messes up its reporting obligations, it might have to pay special interest at its own election, which is a fancy way of saying they'll pay a penalty if they don't keep their books and disclosures in order. These notes are set to mature in May of 2032. But they can be converted or bought back before then. The really juicy part for investors is the conversion. These notes can be turned into shares of TeraWulf's common stock. Right now, for every $1,000 of notes, you could get about 50.15 shares. That means each share is valued at roughly $19.94 if you convert. This conversion price is something to keep an eye on as it can change under certain situations. So, what are they going to do with all this money? They say it is primarily to build a data center campus in Abernathy, Texas. That is a major capital expenditure, a big build out. They also mention general corporate purposes. That is a bit of a catch-all, but building new facilities is a pretty clear and significant use of funds. The deal was made official with an indenture, which is basically the contract for these notes. Wilmington Trust is acting as the trustee, making sure everything stays on the level. These notes are senior unsecured obligations, meaning they're high up on the list of who gets paid if things go south, but they aren't backed by specific assets. The ability for holders to convert depends on the date. Before February 2032, it is limited to certain events, but after February 2032, holders can convert their notes whenever they want up until shortly before the maturity date. TeraWulf also has the option to buy back these notes. They can do this starting in May 2029, but only if their stock price has been doing well for a good chunk of time. Specifically, if the stock price has been at least 130% of the conversion price for at least 20 trading days within a 30-day period. This is a protective clause for investors, making sure the company doesn't just buy back the notes when the stock is low. Another important point is what happens if there is a fundamental change. This is a pretty standard term in these kinds of agreements, and it basically means if a major event happens like a merger or acquisition, investors have the right to have the company buy back their notes. As with any debt, there are default clauses. If certain bad things happen, the trustee or a significant portion of the note holders can demand immediate repayment of everything. It is standard stuff to protect the investors, but it shows the kind of risks involved. This whole deal creates a direct financial obligation for TeraWulf. They've taken on this debt and it needs to be accounted for. It impacts their balance sheet significantly. And because these notes were sold to qualified institutional buyers and aren't registered with the SEC in the traditional sense, it falls under the unregistered sales of equity securities category. This is a key detail for understanding how they manage this massive fundraising without a public stock offering. The underlying shares that can be issued upon conversion also aren't registered yet and can't be sold without registration or an exemption. To get the word out about this big financial move, TeraWulf issued a press release on the same day, the 31st of October 2025, announcing the closing of this offering. These reports often come with these press releases to give the public a snapshot of the news. Now, like most corporate filings, this report includes a cautionary note regarding forward-looking statements. This is legal boilerplate to say that anything they say about the future, like their plans for the data center, might not actually happen. They're hedging their bets, and it is their way of saying that unforeseen things can always change their trajectory. They're making it clear that their actual results could be very different from what they hoped for, and they're not promising to update these statements if things change. Finally, the report lists all the important documents attached, like the indenture itself and the form of the note. They also include that press release we just talked about. And importantly for us researchers, they've included the cover page interactive data file, which means this filing is also in XBRL format, making it easier to pull out and analyze the numbers digitally. So let's break down what this all means for TeraWulf. They've effectively secured a massive amount of capital, over $1 billion, through convertible notes. This is a huge vote of confidence from big institutional investors who see potential in their plans, especially the construction of that data center campus in Texas. The 0.00% interest rate is a bit of a trick. While they aren't paying regular interest, the real cost is the potential dilution if and when these notes get converted into stock. If the company's stock price soars, these investors will convert, and existing shareholders will see their ownership stake shrink. But if the company struggles and the stock price doesn't rise enough, they'll have to pay back the principal, which is a significant debt burden. The key here is execution. Can they build that Texas data center efficiently and profitably? Can they manage their operations to keep their stock price attractive enough for conversion? Or strong enough to pay back the debt if conversion doesn't happen? The biggest risk is that the massive investment doesn't pay off, leaving them with billions in debt without the revenue to support it. On the flip side, securing this much funding signals strong belief from sophisticated investors in TeraWulf's long-term strategy. If the Texas campus becomes a success, it could massively scale their operations and profitability. It is a high-stakes gamble, but one they've clearly decided to make. Now, looking at these results more broadly, TeraWulf is making a bold move to expand significantly. The challenge is always in the execution of such large projects. They're betting big on their ability to build and operate these new facilities successfully. The market's reaction to this news and their stock performance going forward will be telling. Alright, that is our breakdown of TeraWulf's latest filing. What is your take on this massive fundraising and what it signals for the company's future? Do you think they can pull off this expansion and make it profitable? Drop your thoughts in the comments. If this deep dive was valuable, hitting that like button really helps us out, and subscribe for more corporate decoding. Don't forget to check out the Discord community linked in the description. Thanks for watching, see you next time.